Shares of Chipotle climbing to an all-time high today after it announced its first ever stock split, pending shareholder approval at an annual meeting in June. And it's not just any split, a 50-to-1 split, one of the biggest in the history of the New York Stock Exchange. The fast casual brand on a tear, up nearly 85% over the past year. The share price is currently just above $2,900. That means if the split were approved today, shares would go down and trade about $58 a piece, but you'd have 50 more of them for every one you own today. Joining us now to discuss is Setyan, restaurant analyst at Wedbush, and our very own Kate Rogers. Kate, welcome. Good to have you with us.
Great to be here. Thanks.
What do you think of this stock split?
Well, I think exactly what you got at. The stock has gotten quite expensive for investors, and Chipotle wants to make this more accessible, not only for individual investors, but also it mentioned employees in its announcement yesterday. I think two other notable things, which I'm sure Nick will hit on, but they did announce a one-time special grant for general managers of their restaurants and also for employees who have been there for at least 20 years, right? So they really want employees to take part in the financial success of the company, and that's a big part of this.
Employees have been there 20. I didn't even know Chipotle was 20 years old.
More than 30.
Is that right?
Yeah.
Wow.
And so, yeah, I do think that's notable. And Chipotle obviously talks a lot about investing in its employee base. General managers is a position that they widely tout. You can move up to that role within 3 years and make over $100,000 with benefits. So this is just another example, right, of what Chipotle is doing.
So, Nick, we'll get to the question of the stock split in just a minute. But this is a company that is on fire by sort of any measure. The increase, what do we say, 80% so far this year? I mean, that's just insane. How are they doing it?
Well, first, thanks for having me. I've personally been very surprised at, the continued traction it's getting with many of its initiatives. Particularly the main innovation has been, extremely successful. The carne asada, was a big driver in Q4. It was a very big driver in Q1. And now they've, shifted to chicken al pastor in the middle of March. Hopefully that's, as big of a contributor. Now that, the labor is no longer much of an issue, they can focus on speed of service. So throughput, particularly during those peak hours, is a big driver as well. A lot of technology initiatives, again, focusing on throughput and efficiency. And obviously the marketing has been very effective as well. And then last but not least is the loyalty program and a lot of the digital initiatives.
And Nick, how much interest do you think retail investors will wind up having now at a much cheaper price? I'm thinking also about younger investors, right? People love to invest in what they know. Chipotle's been such a hit.
This would be on my son's list, by the way.
Exactly. So what do you think about that?
I do. I mean, I think there's definitely going to be a lot of incremental demand, right? If just practically speaking, if you're investing $500 a month, on an ongoing basis, as an example, and you want to buy a specific stock, Chipotle, you can't do it if it's trading at $3,000, right? So, this is just practically speaking going to allow many more people to participate in the story.